Hey, Jason, we've got Scott back. And, Scott, I want to bring you in. Let's talk, I want to switch out of equities. Let's get back to this discussion about gold. What are we seeing with what's going on there? And then we'll bring in a discussion about the equities and how I can still make some money in all of this.
Yeah, I think you guys hit the nail on the head before when you said it's somewhat of a short covering rally there. We dropped so much, so fast, that all these shorts, as soon as they saw the first sight of gold, popping back up, they had to run in and cover. Now, the trend, the general trend of gold still is very bearish. So once we settle in here, probably, maybe around this level, maybe another $20, $30 higher, I wouldn't doubt if it consolidates and then trends back lower. But I think the main cog behind this really is a short covering rally.
But Scott, isn't gold really just a sideshow right now on a day where the equities hit all-time highs for the S&P and the Dow Jones Industrials? And what are the guys and the women in the pits talking about in Chicago as it pertains to, let's say, the next month or so?
Well, I think what we see tomorrow morning with J.P. Morgan and Wells Fargo, which everyone is, just beaten down, is really going to set the tone. Because when you look at it, especially with Wells Fargo, with the massive rise in interest rates we've seen over the last 2-3 weeks, over the last month, how is that going to affect the housing market going forward? Not right now, not for the next month or two. How's it going to affect it going forward to the end of the year? So I think the key tomorrow with both these big banks is not so much the numbers, the revenue from this past quarter, what is their guidance? And if we start to see some decent guidance and no pullbacks whatsoever, that's going to help propel this market higher.
Hey, Jason,
one of the things...
Scott, let me hold you right there real quick, because you just brought up a key issue talking about revenue. And Jason, one thing that I hear different analysts saying, I think you believe is, hey, be real careful with second quarter earning results. Revenue is what you should be paying attention to. You're optimistic about the market, but what would make you less optimistic if we start missing on revenue?
Yeah, we're agreeing with what you're saying here on earnings and revenues. You look out in the back half of the year, and earnings estimates from analysts are still a little bit high. They're looking for double-digit gains in the back half of the year, and that's quite high in an environment where the past couple of earnings reports have seen revenues moving sluggish and barely coming in line with expectation for majority of companies, whereas their bottom lines have been gaining due to cost cutting. There's only so long that can last. And we think this is still a kind of a sluggish economic growth scenario. So while we like equities long-term because the valuation is there relative to fixed income, we think you have to be really careful what you're buying. You have to focus on profit margins.
Hey, real quick, what should I be buying right now?
It should be quality, thick profit margin companies. If you're in a low-growth environment, leverage does not work. Thick profit margins work. Making extra money, reinvesting that money by buying stocks or expanding your business. Companies like 3M, Microsoft, or Johnson & Johnson, these are in kind of fairly different industries, all of which are still reasonable valued stocks, all of which have reasonable dividends that they pay, 2 to 2.5 to almost 3% in one of the cases, all of which are growing those dividends. They're reinvesting their proceeds. They're buying their own stock with buybacks, and their profit margins are 15 to 20. In case of Microsoft's situation, over 20%. Heavy return on assets across the board. That's how you make money in a slower growth environment is by having a lot of profit generation and reinvesting that in the company.
Well, let's talk about the loan atmosphere right now. We know that the government has wanted banks to loan more. And if you're looking for some type of reactionary trade to that, what, Jason, do you look at?
Well, one of the things you can look at, banks have, this kind of falls outside of our bucket, but banks, particularly mid-level, mid-cap banks, have an interesting position here in the environment. They tend to be regionally focused.
It almost seems that many of them picked up where the big banks left off, in that I know when I refied my house, I couldn't get one large bank that will go unnamed, Citigroup, even though I'm a client, to do it, but a smaller regional New Jersey bank, Lakeland, did it.
And you have to be selective there. There are some that are great banks and some that are not so good banks. There's a lot of companies there that are mismanaged. They're very different from the large banks. The large banks have large investment banking businesses and global franchises and all these other moving parts to them. The smaller banks are considerably more simple. They have lending practices primarily. They weren't levered as much as the big banks were. They're in a much different position. And truthfully, they're benefiting from two primary factors in the U.S. One is the improvement in the housing situation in the U.S. number one. And number two is this onshoring of manufacturing that's coming from the shale gas development. The fact that energy prices are so low in the U.S. is driving manufacturing here. And what happens when you build a plant? You have to finance it. And guess who's financing it? It's the mid-level banks. It's not the big guys.
Jason and Scott, we appreciate it. We're going to change Liz's name because of Citigroup to Meredith Whitney. But Jason Pride, thank you very much. Scott, we'll see you in just a few minutes for the S&P futures close. Hey, S&P futures are closing. Let's go back to Scott Bauer in the pits of the CME. And real curious, what do we have? We've got to have a new support level on the S&P.
Well, you know, if we rally tomorrow, if we get good numbers tomorrow and we rally 1,700 is the next level, these guys are telling me here. I mean, this is the second time we're up here, and if it's sustainable, then we'll see 1,700 probably within the next week.
Okay, but to Adam's point, tomorrow, what do we see?
Tomorrow, it's all based on what we see with J.P. Morgan and Wells Fargo.
All right,
if there's any sort
no matter
of
what the numbers
news,
today,
off we go.
Excellent point.
Yep.
Forget it.
It's all
Before the
based
bell,
tomorrow
watch
morning.
Fox Business. We'll have those numbers for you. Thank you, Scott.
Thanks, Scott.